while avoiding chart crime. My guests today are Clay Collins of Nomics, a market data provider known for filtering fake volume. Welcome, Clay. Clay will reveal...
Hey, it's great to be here. Thanks for having me.
Great. This is how every conversation begins right now, right? Is with a brief pause. Clay is going to reveal how, in a category full of new markets and metrics, the story can change widely with the data methods used. Next, I'm going to sit down with Frederick Haga of Dune Analytics, a platform for data visualization and analysis of decentralized finance systems. Frederick, welcome.
Thank you so much.
And my third guest today is going to be Lucas Nuzzi from Coinmetrics, a pioneer in on-chain data. Lucas, thanks for being here.
Thanks for having me, Galen.
So Frederick is going to talk about decentralized finance, blamed in part for market disruption on March 12, but he'll show the story of the past year of growth. And Lucas is going to be talking about Bitcoin's use over a longer term from the beginnings of the network through various epochs that it's been through since then. So Clay, I want to start with you.
Sure.
If you could just take a minute, first of all, to introduce Nomics, your company, and tell us a little bit about what you do and what you think sets you apart.
Yeah, so we're Nomics.com. We're a market data provider and consumer pricing website, going head-to-head with the likes of CoinMarketCap and others. We're really focused on data transparency and data quality. We build our own candles. We don't trust exchanges candles for the most part. I think our bread and butter is really on acquiring kind of gapless trade data and sort of high frequency order book data, getting the primitives and building everything up from there ourselves. And there's a lot to be done in this space. I think, while, sort of site after site is adding a bunch of maybe kind of interesting but irrelevant indicators, we're focused, I think, on the boring basics. I don't think anyone has really yet nailed the boring basics when it comes to exchange data. Just yet, even us. There's a long ways to go.
Talk a little bit about transparent volume, because that's a thing I think you guys are known for. This was one of the major issues of 2019. The question of what volume is real. How do you guys think about determining whether an exchange is providing real volume data?
Yeah, so I think a lot of people look at our ratings and think that we're rating kind of the overall quality of these exchanges, and speaking to customer support experiences or whether or not they're regulated. Our ratings of exchanges are based entirely upon their data transparency practices, and not on really any other kind of qualitative measures at this time. The theory being that in general, exchanges that are transparent tend to have less to hide in the scheme of things, right? If you were being audited by the IRS, the ideal scenario would be that you wouldn't have to show every individual receipt over a long time horizon. Ideally, you could show summary reports over a short time horizon. So we found really interesting correlations between data transparency and sort of lack of manipulation. It's not always perfect, and there's plenty of problems that we need to iron out. But yeah, we're I think one of the interesting metrics we provide for a given asset is the percentage of volume or the raw amount of volume flowing through a particular asset, or trading pairs, including an asset that comes through transparent exchanges. And so that's what we call.
Basically the assumption being, if the exchange is kind of showing every transaction, every tick, every trade, that they're not likely to be included, to be faking transactions, to be wash trading and the like.
They definitely could be wash trading. It's just that we're going, there's a much more healthy audit trail there.
Right.
And
if they are,
it can be discovered.
If they are, you could find out.
Right.
Yeah,
exactly.
That's
And we might
good.
not find it out immediately, but there's lots of things to work on.
Well, I know you have a lot of interesting things to talk about today. So without further ado, let's get into some of the slides that you brought. If you wouldn't mind sharing your screen.
Okay. So I want to start off with talking about quote currency dominance, which is something that I think is not talked about very much. So, let's talk about quote currency dominance, sort of as an indicator. So what is quote currency dominance? What we're calling this QCD. So for a given trading pair, I guess we first have to define what a quote currency is. The quote currency is the second currency in a trading pair. So this is the base currency, this is the quote currency, and it's generally uses the price reference. The quote
So
currency
if
is
I say that Bitcoin is trading at $9,000, that means that the US dollar is the quote currency in that case, correct?
right. That would be a BTC to USD
Right.
trading pair, with USD being the quote currency.
Yeah, great.
So anyway, so that's basically what quote currency is. So what's quote currency dominance? Quote currency dominance is the percentage of overall global volume where the quote currency is sort of what you're looking at. So if you took all the markets where BTC is the quote currency, added up those volumes and took that as a percentage of global trading volume, that would be its percentage of quote currency dominance. And this is a really interesting metric to look at. Here's why I think it's important. Here's my case for this. Money is sort of referred to as a store of value, a unit of account, and a means of exchange. And at least on crypto exchanges, I think that quote currency dominance is the best measure of means of exchange.
In other words, this is a better measure than how many times Bitcoin is used to buy a cup of coffee or something.
Yeah, I mean, this is very crypto exchange centric.
Right.
Right.
And, and people are using it as the unit of account to value other currencies. And therefore that means it becomes the kind of the medium through which trade happens on exchange.
Yeah. So like stable coins are an interesting example of this. I'd say if someone's trading Tether, if that's their quote currency, then probably the unit of count is the US dollar, but the means of exchange is Tether.
Good point. Right.
So there's some interesting things to consider here. And we've done a lot of we've looked a lot at quote currency dominance, and we're not, I mean, at our core, we're an infrastructure company, so we don't have a single full-time analyst on our team who looks at data. We're much more accustomed to providing this data to analysts. But we found that during periods of time, quote currency dominance, or the dominance of a currency as a quote currency, has some interesting correlations. For example, this is May and June of last year. We found that Tether as a quote currency was negatively correlated with market cap, and that was statistically significant. This sort of suggests that when people are trading across Tether pairs, often they're looking to exit, I guess, non-stable coin positions. There's a lot of conclusions you could draw from this.
Basically, overall market cap is going down. Tether's use as quote currency is going up. Is that the trend?
Right. Yeah. During this period. Yep.
Yeah. And when was this again?
This was May to June of last year. Conversely, with the United States dollar, the USD's quote currency dominance is positively correlated with market cap during that time. So, in general, what we see is people tend to trade US dollars to buy Bitcoin, but once they're in the system, if they want stability, they tend to go to like a stable coin versus exiting out fiat, maybe because those are more expensive trades. There's a lot to look into here yet, and we haven't fully examined everything. But I wanted to kind of take this at a high level and speak to, we're going to get more and more granular here over time. But if we look at fiat versus crypto quote currency dominance over time, what we find is that, at the very beginning, fiat was the dominant quote currency. So people were trading across, BTC to USD pairs. Ethereum to USD pairs, or Korean won, or euro, British pound, etc. But then somewhere around 2017, we started seeing crypto assets being the dominant quote currencies on a volume basis. And
you start to think about the rise of like BitMEX and Binance around that time.
Yep.
And a little later than that. And certainly that sort of crypto to crypto activity really growing in volume, reflected in their growth as well.
Yep. Yeah, exactly. And you can kind of follow this over time from 2013 to basically now, a lot more kind of fiat quote currency dominance. And then really in the last couple of years, crypto quote currencies dominating for the most part. So, all right. So we have this sort of in broad strokes, fiat versus crypto. But then if we decide to look at asset type versus crypto, what we see is really this is a story in the last couple of years about stable coins versus stable coins versus cryptos. You've got
stable coins versus, and when you say crypto there, you're not including
non-stable coins.
Floating crypto. Yeah.
Right. Yeah, exactly. Yeah. That's not.
And interesting also to me to see the infinitesimal amount that exchange coins occupy in this chart.
Yeah. I really thought that was going to be a thing.
A lot of people did.
Yeah. Like I think it was a smart move. It was a smart strategy to attempt on the part of Binance,
sure,
to list all these BNB pairs, because if you want to sort of, if you want your crypto asset to become, sort of the unit of account or means of exchange for the space, that's one of the fastest ways to do it, right? You've got the most popular exchange by volume,
right? For if you use if you're trading with the Binance coin, there's some reduction of fees, right? I think.
Right. Yeah. And it really is kind of a graduation for a crypto asset to move from being a base currency to being a quote currency. I mean, there's very few crypto. I mean, it's all Bitcoin, Ethereum, stable coins, and fiat. I mean, that's really all you see. Every once in a while, someone will, there'll be a very specific exchange and maybe they'll list their exchange coin. But that there's not a lot of critical mass there. So if we break this down even more, or sort of we look at this on a percentage basis again, we see 46%.
Right. This is the same data just showed with 100%.
Yeah, on a percentage basis versus.
Yeah. Okay.
Yeah. So, we see, in July of 2019, stable coins were 50% of quote currency volume. And we see stable coins over time eating up more and more of that quote currency dominance.
It's just gobbled the fiat, really. I mean, the crypto is pretty much flat to my eye, or there's not a huge change there.
Yeah, it's gobbling up fiat, and
this is interesting because you think of it as replacing Bitcoin in some ways, right? But it really is the growth of the crypto to crypto trade that and stable coins have just captured that as it's grown.
I mean, if you drew a line here through non-stable coin crypto dominance, it would definitely be going down as well. So fiat would be going down, and non-stable coin crypto would be going down also.
Cool.
So then if we want to dig into this a little bit further, kind of what we see is really the rise of Tether. And there's lots of people have a lot of issues with Tether. I'm not here to enter that debate. But I do think there are kind of issues with with its backing, certainly, and transparency around that. And
I mean, whatever your feelings on that, you can't deny the dominance, and it's apparent in this chart. What's interesting to me also is how unfavorably some of the smaller stable coins compare to Bitcoin itself.
Right. Yeah.
Right? I mean, I would expect to see a big ban for Tether, and then a smaller ban, but still significant for USDC.
Right.
But when you
Right.
put it on the chart next to Bitcoin, you hardly see any of the others besides Tether.
Yeah, I mean, we really seem to see, Tether and Bitcoin
Yeah.
kind of growing here over time. And then everything else, USDC, Pax, Korean won, other fiat currencies, even DAI. I mean, they're really just blips on this radar. And then if we look at this on a percentage basis, again, that's what we see is
Right.
even Bitcoin is going down and getting gobbled up by Tether. It's I think one of the interesting things about crypto is that it's attempting to disrupt the traditional financial system, but Lindy effects and first mover advantages, in many cases, seem to be sticking. Right, people, once they've entered this new system, don't seem to want to switch a lot. And Tether's a great example of that.
Yeah, I think that's part of the story as well of some of the exchanges that have grown. The listing of many coins has been. I was talking with Sam Bankman-Fried at FTX about this a little while back. Like, why list all these shit coins? They don't matter. And the reason is, well, if you want to trade that particular asset, that's a good reason to switch. If you can't get a good liquid market in it elsewhere, or anything approaching a liquid market in it elsewhere, then you will switch for that. You won't necessarily switch for some bell and whistle on a Bitcoin,
Right.
Trade.
Right. Yeah. If that exchange is the only place where you can trade an asset that you're passionate about, then that's going to lead to
that's where you're going.
New account growth. Yeah.
Drive.
Yeah.
Clay, I want to be conscious of time. We got about 5 minutes until we want to switch ahead here, but just flagging that for you as we go through this. This is great stuff.
Yeah. So I think, on the whole, it's hard to miss just sort of the dominance of Tether as a quote currency. I think that, it's kind of interesting that people, what the data seems to show is that people tend to enter through fiat, but once they've stayed there, if they want to kind of keep the stability of the USD, they're not withdrawing out to USD. That money, looks like it's staying within the ecosystem, even if there is a sort of a flight to stable coins during unstable times. So I think the second thing to talk about is something that I think very few people are talking about, and that is how most aggregators are doubling reported crypto volumes. And so we can do this in less than 5 minutes, but I want to talk a little bit about this. So when we count volume, globally, we believe that the right way to do this is to take all the trading pairs, or all the markets that exist. So a market is a trading pair on an exchange, and add those up, and all the volume that flows across each market, sort of all those markets added up, that's total volume. What we're seeing a lot of people do is kind of an interesting, and maybe even accidental manipulation of the data, where what they do is they take all the volume for Bitcoin and then add that to all the volume for Ethereum, and then add all the volume of Tether. The problem is that that Tether's volume is being included in Bitcoin's volume, and Ethereum's volume is being involved in Bitcoin's volume. In all of the Tether markets that include Bitcoin or Ethereum, that volume is counting both towards
You're
Ethereum
double counting
and
those BTC ETH pairs, for example. Yeah.
Right.
So wait a minute. I mean, I want to ask a sort of a fundamental question about this. Like, it's frustrating to me that we don't have even a really clear picture of what volume is. Even the transparent percentage that you guys provide, I'm sure, significantly undercounts the real volume in the market, because exchanges like Wobi and OK are excluded.
Yep.
So, that's frustrating and annoying. But for the investor, to what extent does it actually matter? If you're going to be sophisticated about thinking about volume, you're probably going to develop your own ways of calculating it and thinking about it. To what extent does it matter what the volume of the whole market is, I guess, is the question.
Yeah, that's an interesting philosophical question. And it's not, I mean, I think that one of the issues in the space is that exchanges aren't regulated. You could start a 0x decentralized exchange, in an hour if you wanted to. You wouldn't have liquidity, but you could start one. And so, when you start kind of thinking about dark pools, OTC desks, bulletin board services, decentralized exchanges, it's almost impossible to get a perfectly accurate number here. Then add wash trading or incentivized trading. It's hard, but I think that despite the fact that it's really hard to come up with a great number here, the methodologies should be correct. And if all volume is counted towards both the base and the quote currency, that you've got a doubling of volume. I'll percentage that is going to be fake volume, but let's at least have proper methodologies in place. So we actually added or audited a few sites and actually found that they were, the biggest top sites were double counting volume because they were summing up the volume of each token or each crypto asset rather than summing the volume of all the markets in the space individually. So anyway, I could go on and on talking about this. I have a third set, but we'll keep that for another day.
Okay, fair enough. Sounds good. We got to move on to Frederick. I actually
Perfect.
one thing I wanted to ask you, Clay, and this question is coming up in the chat here. Will you make these slides available? I don't think this is the first time I'm seeing them.
Yeah.
Can we have these and then provide?
Yeah,
them?
I'll send them to whoever need to send them to. I'll post them on Twitter to
answer the person who was asking about this in the chat. We'll definitely make these slides, and I believe the other presenters as well, available to folks for download afterward, as well as this presentation will be available to watch again.
Perfect.
Anyway,
Thank
Clay,
you.
thanks very much. Really
you.
appreciate the time and the presentation here and the care that went into it. If
Absolutely.
anybody wants to get in touch with you or learn more about Nomics, where should they go?
Yeah, we're on Twitter at Nomics Finance, and I'm on Twitter at Clay Collins.
Great. Thanks a lot, Clay.
Thank you so much. Appreciate the opportunity.
Next up, Frederick Haga from Dune Analytics. Frederick, you there?
Yeah, I'm here.
Great. So, Frederick, if you could just start again by telling us a little bit about Dune and what you guys do. I'm familiar with you as a sort of a platform for DeFi analytics, but I'm sure you can describe it better than that and better than I can.
Sure. So what we do is allow anyone to create analysis on top of Ethereum data. So we provide data tables with smart contract actions and events, and then users can go in, query it with the SQL, and then create their own charts and share that and so forth. So we have a few thousand charts going and growing quickly. So yeah, that's Dune.
One of the things I like about it, and this is kind of a salient feature of crypto in general, is the accessibility of data. Data is at a premium in traditional financial markets. I think some of the volume issues we were talking about with Clay a minute ago are sort of actually flow from that openness, right? Because people are not monetizing data. It becomes a marketing tool for some exchanges. Not an issue as much in DeFi, perhaps. In any event, if you want to just launch right in, let's get into the slides here and see what you've got to present.
Sure thing. Let's see. Are these up now? You see my slides?
Yes, indeed. I can see them.
Okay, cool. Yeah. So yeah, I wanted to dive in a little bit into some of these, you could maybe call them more typical product metrics. So what we do is look into what like the product usage of things built on top of Ethereum looks like. So we'll just start off with a pretty familiar high level metric, which is number of users. And this is obviously something that's thrown around quite a bit. Like there's no users on crypto products beyond trading, right? So to start off, if we go back 1 year, we see that across range of different like well-known dApps, actual users was at 30,000. So that was 1 year ago. Today,
just
there
to
are
clarify, I'm sorry,
160,000.
Frederick, are these just DeFi dApps, or are these all dApps?
Yeah, so these are DeFi dApps. Yeah,
Okay,
that's a good
thank you.
question. So
I thought so, but just want to make sure.
yeah. So you can go in and look at the actual dashboards for this. The queries are done by Richard from One Confirmation. So yeah, I'll share access to that later. So yeah, so we've gone from 30,000 to 160,000, and then the question is kind of how much is that? Is that a big deal? So just to give you a point of reference, so 30,000 is about the population of Gibraltar, the country on the south end of Spain, where there are actually quite a few crypto companies listed or from. So, you know, it's not a lot. You see the whole country in that picture. So fairly small amounts. And then you have like this year, how many? 160,000, and that's number of employees Amazon added for COVID times. So, you know, it's still it's still not insanely huge, but it's at least one of the biggest companies in the world and whatnot. So it's getting there, and the total growth is about 5x, and I think that is in a year. And for like a high growth startup, that is not insane growth. It's like, it's decent, but it's not definitely like totally crushing it either. So I still think there's a fair like bit of room to really have explosive growth, but it's looking better.
I think the crypto sphere in general, especially after the intoxication of 2017, experienced a real moment of sort of chagrin watching the number of users on dApps in general, right? You sort of that kind of the narrative of the Web 3.0 that drove 2017 was really debunked by those numbers. I'm curious how you think these numbers compare sort of to the dApp use in general, including that category broadly.
So I actually have a couple of stats that might shed some light on that. So one thing here is number of DAI senders. So or this is senders or receivers, I think. So these are not included in the stats for like dApp users. So you see there's like double the amount in terms of DAI users, and I think this is probably a pretty good proxy for like the overall user base, because I think very few people have used a dApp and not touched DAI in any way. So about, and you can also assume that those 160K are basically contained within those DAI users, right? So about, you could say there's like 160K power users opening CDPs, taking out loans, doing these things. And then you have another 150K doing actual or just sending like a stable coin around.
Sure.
And then
or converting some funds into DAI. Maybe not becoming that power user yet, but showing some interest in DeFi in any event.
Yeah. So that's that, and then you can have like one of the more popular products, which is Uniswap. They have in total 50K users. So that is about 1/3 of the like DeFi user base.
Right.
So I'm gonna get a little bit back to like DEX adoption. But one thing that's interesting is that it's actually like not a very clear winner takes all effect. Obviously, like DAI is very present, but that is maybe one layer below like the actual product, one could argue. So yeah. So going beyond like just the sort of user number, what's the actual activity? What does that look like? So if we look at DEXs, so last year there was $2.4 billion worth of DEX volume, and then again, like, is that a big number? Is that a small number? And that is equal to half a week of Apple revenue. So, which is like actually a fair amount. It's definitely not even close to the centralized exchange volume, but it's still
right.
like.
Well, that's the other comparison. I mean, you sort of maybe compare DeFi to the DApp category at large. And I think my impression is, if you tell me if you agree, that DeFi compares favorably to the way adoption has been going in other categories like games, for example, and whatever else you might have. But I think also the comparison maybe where it's not as favorable is if you look at the torrid growth of centralized exchanges and exchanges that have been able to offer innovation there have just exploded, right? And I don't think the DEX category has shown that level of growth. And I'm curious if you can, talk a little bit about why you think that is, or kind of what stage of that growth DEXs and DeFi might be in at this point.
Sure. Yeah, I'll get right to it. So yeah, just to give you a feel for the landscape first. So here's the list for top volume last year. So you see they're all like contained within a fairly tight range, I would say. IDEX was quite significantly the bigger last year. But that is changing quickly. So I think a very interesting dynamic. You don't have to look at like the details of this chart, but this is market share for different DEXs over time, market share of volume. And I think what is pretty interesting is that there's no clear winner or pattern emerging for now. So I think that's probably a healthy thing. It's very competitive.
This is a weekly. Yeah,
these are weekly market shares in terms of volume. So
I mean, I do and forgive me because I have the window kind of minimized here. Let me actually blow it up a little bit so I can see more clearly. Uniswap is the pink band, is that correct?
Yeah.
Really I mean, if you just thought of like, the March 2020 as a as a kind of a turning point in all kinds of narratives. Certainly a strong story coming out of there for Uniswap.
Yeah, it's looking good these last couple of weeks, but it's been up and down, and I still think there's like a lot of things that's going to change in this space. And
what is it about? I mean, any sense of what might be driving that? Why Uniswap would be benefiting at this time in this environment? Did they hold up particularly well on March 12? What might be the sort of the story behind that?
It's a good question. I think obviously from the beginning, the selling point of Uniswap was just like you could get liquidity for like long tail tokens, and anyone can list anything, and you could sort of get things going. I guess with the price downturn, I don't think I have this in the slides right now, but around March, it was the first time that the crypto prices were down and volumes were up. So usually the ETH price is correlated with volume, but it changed. And I think that might be a sign that people are actually sort of using these DEXs to do like meaningful trades for them, as opposed to like pure speculation or just like frenzy activity. That you can like go into a stable coin using the DEX and not ever having to actually like exit your self-custodial wallet. So I think it's might be an indication that and then people do like Uniswap for those type of use cases.
Yeah, no, I think that's a really good point. Typically crypto markets volume and price have gone hand in hand, have correlated positively, which is extraordinary, or has always, to my mind, stood out as a salient feature. That tends to be the opposite in traditional, at least in equity markets. And I think that shift on March 12 is something that I'd like to come back to later. That's like, you're saying that jogged my memory, because it's something to watch. I think if that continues to happen for the future, that we see volume go up in times of downturn, in price, that's a certain indicator of like a change in behavior in the market.
Yeah. So yeah, I got a handful of more slides. So looking at volume again, the volume peaked a historical high in March. Sneaking up towards $1 billion for a month, which is pretty exciting. And again, to put these things in perspective a little bit, so back in January last year, the total volume was about 50 million, which is about the same as the most expensive car in the world. So that's like not that much. It's still just a car, while the volume for March this year equals the second most expensive house in the world in the south of France. So we are now on the cusp of going beyond what people have for their personal pleasures, and having a bigger scope and scale of things. So I think that's so back to your question previously on like where do we see this going, or what stage are we in? I would say we're definitely starting to go from just people playing around to people actually solving their problems, but the user base is still somewhat limited. But you can actually, I think there's like clear signs of improvements. It's definitely not like going straight to the moon or being like wildly adopted or used, but it's like healthy growth, I think, appearing. It's not like no one is using it and it's just like lying there dead. That's definitely not the case.
Like Lightning applies the reckless tag, right, to the activities on the network. I think which underscores a sense of this being an experimental phase in the development of that layer 2 product. Do you think that's a kind of a comparable for what's happening in DeFi right now? Like if you sort of look at these numbers and think of this as the number of people who are, say, experimenting with DeFi, you might feel like that's a much more impressive growth number than if you were thinking of it as like real adoption or real usage.
Yeah, I think that's a fair way to look at it, and a little bit of a glass half full type of assessment, that it's like if you really compare it to the traditional DEX volumes centralized exchange volumes, it's not that much. But if you compare it to like just being a toy that is completely useless, then it's actually like really showing some promising signs. Yeah.
No, you're absolutely right. If it's an experiment, then this is a pretty good experiment. I was just looking this morning at ETH volume on market wide on Nomics. The transparent volume that they posted there is 26 billion. So yeah, that's certainly, if that's your benchmark. But even if that is your benchmark, if you think of this as an experiment, it's an experiment worth paying close attention to.
Mm-hmm. So yeah, I'm going to finish off. I think you mentioned 2017 and how like there was just hype and like no real engagement. I think what's interesting now is that you actually see new products emerge on top of these systems that actually get meaningful traction, which I think is also like a really good sign that something is moving in the right direction. So one recent trend is these DEX aggregators. So
can
one
you,
of the biggest one.
For those who are not necessarily familiar with the DEX aggregator, can you kind of, in a nutshell?
Sure. Yeah. So they allow you to trade across all the different protocols and different systems that facilitate trading on Ethereum, for instance. So that would be like 0x, Uniswap, Kyber, and instead of like going directly to one of those, you go to a DEX aggregator, which shows you essentially what prices you could get across all of these, and then you can trade directly from there.
Pooling liquidity, basically.
Yeah. So it's like almost like when you can go to some of these consumer sites and check what's the best interest I can get on my loan, and then you could like, change your loan or something, and it's kind of similar, except that you can just like plug and play right into these products. where you
Right.
get a list and prices.
And just to be clear, because I actually could do some education on this myself. That this is kind of like a best execution, right? Where you can sort of place an order, and it'll pick the best venue, and maybe even split the order multiple venues.
Yeah.
Right. Yeah.
Yep.
Okay.
Yeah.
Great.
So now recently, checked this number a few days ago. So these guys from 1inch, they actually generated almost 10% of the total DEX volume. So they actually are like a meaningful facilitator of the total volume. And you can look at their growth. So this is their volume. So it almost reached 100 million in March. And that's 8x from December to March. So in a 3 months time span. And they bumped it up to 100 million, almost, or it's 80 million. So you see that this is actually like a meaningful amount of traction for a product, and they are pretty new. I think they built this the first version at ETH New York, the hackathon, about a year ago. So yeah, I think that's a very interesting trend. So yeah, that's what I had.
Great. This is cool stuff. Frederick, thanks very much. Folks, where can we have these slides? So I'll post these if that's okay with you.
Yeah.
And where should people go to learn? I mean, you have the website right here. Anything else people should know about where they can find out more about Dune Analytics or get in touch with you guys?
Yeah, we're at Dune Analytics on Twitter, and yeah, there's plenty of content. It's free to sign up, and you can look at all the other charts done by our users, share them, fork them, create your own. So yeah, it's a fun place to explore what's going on the Ethereum blockchain.
Great. Thanks again, Frederick. Up next, Lucas Nuzzi from CoinMetrics. Lucas, are you there?
Yep.
Great. So Lucas, you now you have been in crypto research. You've been looking at charts for a while. You were at digital asset research before this, and recently joined CoinMetrics. Is that right?
Yep. So I recently joined CoinMetrics. You head up their network data product. Been working on network data for quite some time.
Great.
Been working on custody for perhaps even longer. Started my career in infrastructure, in Bitcoin infrastructure back in 2013. And turns out there's a lot of network data related to that. And as of right now, I'm just focusing on network data at CoinMetrics.
Yeah, I mean, in CoinMetrics, that's kind of the thing that CoinMetrics is known for, right? Is pioneering some network data metrics that have become, I think, pretty influential and widely cited. Can you talk a little bit about what CoinMetrics does, what you're doing now, kind of broadly speaking, what's CoinMetrics about?
So CoinMetrics is a data provider. We offer predominantly network data on a variety of different crypto assets. I think we're the provider that covers the widest spectrum of assets in the market. And we're also provide market data on various cryptocurrencies. So the company has been around for quite some time, and has kind of led the way into thinking, about network data, created some very interesting metrics like realized cap, which is now used in several other metrics like MVRV, and really paved the way for people to understand network data. And so at CoinMetrics, I'm just further developing that vision and product, and finding some more cool stuff to do with network data.
Very cool. Well, let's get into it. A recap
Awesome.
of Bitcoin's third epoch.
Let's do it. So for those of you that are not familiar with this concept of epochs, this is something that Satoshi implemented in the early versions of Bitcoin, and something that started to be referred to as epochs later on due to the halving. Right, so the first halving happened at the end of 2012. That ended Epoch 1. Epoch 2 was between 2013 and 2016. And Epoch 3 just ended with the halving earlier this week, and it lasted 4 years. And I thought it was going to be interesting to highlight some of the main events that took place in Epoch 3, because there's a lot of really interesting things that took place in the network. It really matured in a way that I think it's worth highlighting in that context of an Epoch. So during that time, Bitcoin settled the equivalent of $2.3 trillion in transactions during those 4 years. And here we have a chart showing the adjusted network volume in USD, and that's the purple line, and in Bitcoin, the orange line. And as you can see, there was a huge spike in 2017 as people were going crazy over crypto. But to land on these adjustments, we account for things like change in a transaction. If, for example, you're sending Bitcoin to someone and you don't have a balance of that denomination, you need to generate a second balance for change. And our methodology accounts for that. So this is the adjusted volume, and that's still, totaling over $2.3 trillion over the course of 4 years, 387 million transactions, peer-to-peer transactions. And for context, if we compare, Bitcoin, this 10-year-old network, with Visa and MasterCard credit cards, which settled in 2017, $2.6 trillion. It's really remarkable that they're on the same level. I'm not a fan of comparing Bitcoin as, that's a payment rail strictly, and making comparisons between Bitcoin and Visa, because the assurances are completely different. But it is nevertheless very interesting to see that over the course of 4 years, if we adjust those transactions and filter out to see what are those actual peer-to-peer interactions, it's on the same level than the largest economy in the world for the 2 largest payment processors in the world.
I guess the caveat to that being kind of apparent in this chart is that a chunk of that came in 2017 for Bitcoin.
Exactly.
Yeah.
Yep.
Yeah, but
exactly.
still,
yeah. And,
well, I mean, if you think back to the introduction of the debit card in the 1950s, right? This would they would have been thrilled to see numbers like this right in the first decade.
Absolutely, yeah. And another interesting insight is this shift from Bitcoin to Sats, right? As we think about peer-to-peer interactions, the common denominator, the unit, has changed. And a Sat is a 100 million of a Bitcoin, of a full Bitcoin. It's the smallest denomination. And here we see the number of addresses with over 100,000 Sats stored in them. And even though, like you said, there was a huge spike in 2017 and 2018 with the speculative bubble, that number of accounts with over 100,000 Sats has been increasing considerably. And even though it dipped after the crash, it really has increased over the course of the past 3 years. And a lot of people see that as a proxy for user adoption, because as UTXOs get recycled and get consolidated, but the fact that there are, over 16 million or nearly, over 16 million on May 1st, a new all-time high of accounts that fit that parameter. It's truly remarkable. It shows that user adoption is taking place on Bitcoin.
With this, I mean, with Bitcoin estimated about 10,000, this would be holders of $10 worth of Bitcoin or more. Is that right?
Exactly. Yep.
Yeah.
So
I want to sort of push back a little bit on this adoption of the term Sats. The term is certainly, more widely known maybe than it was a year ago, although I still think most people think about Bitcoin in terms of Bitcoins. Do you feel like that adoption has occurred where people are starting to think about it in a different denomination, or are we still kind of, to me, talking about things in terms of Sats is kind of a little bit of an insider jargon?
Yeah, it's very much niche to crypto and this this term, stack sats, for example,
Right.
is something that is relatively new and derived from services that allow you to earn fractions of a Bitcoin passively by doing
Right.
things that you would be already doing, like coupons, for example. Lolly is
Products
doing a
like
lot of that.
Fold or Lolly, for example. Yeah.
Exactly. Yeah. So it's still very niche, but and interesting anecdotal piece of information. If you look at denominations in Bitcoin in its early history, very rarely you saw a transaction that broke one Bitcoin down into smaller denominations. It was
Right.
because Bitcoin didn't really have an exchange rate. Transactions were mostly, numbered into actual Bitcoins. And in 2012, as an exchange rate started being, more predominant for Bitcoin USD specifically, people started breaking those transactions down.
Yeah.
And like you said, it's still very niche, but it's interesting to see that if you take into account the $10 worth of Bitcoin, and you count the addresses holding that, it's interesting to see that's been increasing dramatically, right? Because you would see UTXOs consolidate if the opposite was taking place. And another interesting thing on that end, on address consolidation, while that if you consider the count of addresses above 100K, 100,000 sets as a proxy for user adoption, that has increased, but address centralization, concentration of supply, has decreased at the same time. So here in red, we have the number of addresses holding more than 0.1% of Bitcoin's current supply. And as you can see, because of the speculative bubble of 2017 and the bear market of 2018, all of that led to more Bitcoin turnover, right? Over here, right about here, as Bitcoin was nearly having this floor at 6,000 and providing some support, and that was broken. Some users holding a big chunk of the supply decided to sell, and that has led to a decrease in the number of addresses holding a large portion of Bitcoins. So it's interesting to see that has been going down. A lot of these addresses are early addresses that have been presumably lost, including Satoshi's addresses. So this has been another interesting event that took place in this epoch.
And in a way, I guess maybe the growth since then in price has been driven by smaller buyers. You might say, is that a fair way to look at
Exactly.
it? Yeah.
Yeah, if you combine both the growth in accounts over 100,000 sats and the decrease of addresses holding 0.1% of supply, it's an interesting way to compare, especially as the bear market extended into 2018 and people didn't really know what the floor would be. These events really that challenge your belief on price and whether or not you should sell lead to supply turnover, which ultimately decentralizes the monetary base.
Oh, that's great. Yeah, I think that answers. Actually, we had a question from the audience about whether this is a sign of sort of decentralization in the network or consolidation. And I think it's certainly based on that second chart there, you see that pattern heading toward a more broad base of ownership.
Yep, exactly.
Great.
So also during the third epoch, we saw the growth of this whole new mining industry, now a multi-billion-dollar industry. I'm calling it the digital gold rush. And we can see that using the thermocap, which is a term that I think Nick Carter popularized. It is the cumulative USD value awarded to miners via transaction fees and block rewards. And you can think of it as how much has been given to miners to secure the network. And as of May 11th, at the time of the previous halving, a couple days ago, $18 billion have been awarded to miners directly to secure the network.
Is that all time or just during the third epoch?
That's all time. Up until that point, cumulative has been 18 billion.
Yeah.
And that's truly remarkable. I think, you know, it led to the creation of this entire industry around mining. And it's interesting to see that that has reflected in an exponential growth in the hash rate as well. It almost breached a new all-time high a day before the halving on May 10th, with now, you know, nearly 140 million terahashes per second, which is truly remarkable. Makes Bitcoin very difficult to attack as an economic system. So as the industry around mining evolved and progressed, there was also the age of specialization in mining. ASICs became predominant in Epoch 3. And by analyzing the nonces of blocks mined, and just for context, nonces are the value, the number, the string that miners are competing to get. And once they get that, it's called a golden nonce, and it's stored in the block header. And one of Coinmetrics analyst Kareem Helmi has been working on this nonce distribution analysis for quite some time. And it's interesting because we've been able to identify usage of specific hardware by analyzing those nonces. Specifically, the BITMAIN Antminer family of ASICs produce a very unique pattern of nonce distributions. And through that pattern and analyzing when that ASIC was introduced, like at times of announcements, we were able to pinpoint predominance of usage per ASIC type. And it's pretty clear that in Epoch 3, the most predominant hardware was the S9, which at times was mining, you know, 80% of blocks, especially in mid 2018. And it's really interesting to see this curve over here, which really shows the life cycle of an ASIC going down as hash rate goes up, as new hardware is introduced. It shows both increase in specialization and innovation as well.
I love this chart. We've known that the S9 was the killer machine based on you know, BITMAIN's public filings when they were going for an IPO and just by rumor.
Yep.
But this is it right here. And what's most interesting to me is to maybe see what I interpret as an uptick in sort of S9s coming back online, perhaps as energy prices fall. In the last
and for a last. Exactly, and for a final profit squeeze, right? Because after the halving, it's not gonna be as profitable to mine using the S9.
Right. Yeah.
So
and where will those machines go? There's so many of them out there.
Exactly.
You know,
they added.
they're
going to be.
I think it's a question worth asking, but we can get into that another time.
Yeah.
Let's get to the last couple of your slides here. We got about a couple minutes left, and I want to see what else you got.
So we've also tried to quantify the proverbial not your keys, not your Bitcoin. And in Epoch 3, we also saw the introduction of several hardware wallets, right? And those hardware wallets have had an impact on custody, especially for retail customers. And here we have the supply of Bitcoin on exchanges stacked. We've been able to identify these exchanges through clustering methodology, and we've been tracking their balances over time. And as you can see, there's been a noticeable decrease, especially recently, and it's been trending down of supply held on exchanges, which might be given to
sort of
high awareness
since March 12. I mean, if you look at it, right, or could
exactly.
Yeah.
It might be.
Lucas, I hate to cut you off on this one, but I want to move to the last one you've got here, and then move quickly to wrap up. We've got about we've got nothing left here. So quick, walk me through the last one, and then I want to make clear that all these slides will be available for download.
Okay, so I'm going to finish by stating that Bitcoin in Epoch 3 has truly become a global network, and we can observe seasonality here during Christmas, New Year in the East, in the West, and even in the East with the Chinese New Year. Those have an imprint on a network and show that Bitcoin is a collective network that's truly global, and that has activity both in the East and the West. And it's something really interesting to showcase using data as well.
Very cool. Lucas, thanks so much. This is a great walkthrough of the history of Bitcoin network data here. Where can we find out more about Coinmetrics? Very briefly.
So subscribe to State of the Network. It's our newsletter. You can find that on coinmetrics.io. Follow us on Twitter at Coinmetrics, and I'm Lucas Nuzzi, Nuzzi on Twitter. Great.
Clay, Lucas, and Frederick, very good to have you all here. Super pleased to get a chance to walk through these charts with you. For all the people in the audience who asked questions, thanks so much for being here and for putting your questions through. We will make this video available and some of these charts available to you later. Meanwhile, we have a number of interesting things happening on umbrella.io. So look at the schedule, and we've got the World Economic Forum conversation happening on about 30 minutes going on right now. We've got the travel rule conversation looking at